My name is Chris Clodius. I've been at Bloomberg for about 12 years now, and I'm looking after the trade automation business. That includes fixed income, equities, and foreign exchange, and I manage a team for them that looks after trade automation. I think there's two drivers basically. There's one, which we just talked about, is regulation. So more regulation means usually that more clients have to do best execution, have to solidify the best execution policies. And then secondly, clients use actually the best execution to win business. So they're trying to get business from different underlying clients, from different asset managers. And then depending on the asset class, depending on liquidity, it's harder to do best execution for certain asset classes because the market is actually not electronified. So you kind of have to go voice, and it's much easier because you can actually electronify these trades. And what clients actually doing, they're using different benchmarks then to evaluate how they have been doing, and using like a waterfall of benchmarks to identify how has the best execution been. Well, there's two pieces. From a post-trade perspective, a lot of our clients, they are looking at peer data. So they're trying to understand how their execution has been against their peers. So we have a tool called BTCA Peer Analysis or Peer Group, where a trader can actually identify for a similar bond or similar security at a similar trading time, how have the peers compared to them. And that's quite powerful. So you can understand post-trade, how has the execution actually been? Have you been outperforming your peers or have you underperforming your peers? And on the second hand, we recently introduced a pre-trade TCA tool, which is trying to answer two questions. On the fixed income side, it's trying to understand how difficult is in order to execute. So we have a measurement for probability of execution. A higher probability of execution, the actual security should be easier to trade. And a lower probability of execution is probably harder to actually trade that bond. And we give the client as well trade costs according to some of our mid-levels of our pricing sources. So they can understand pre-trade, how expensive is that particular bond going to be, and then trying to understand as well from post-trade perspective, they're going to get where they're going to be at post-trade as well. So TCA, if I think about the post-trade TCA, I think it's important because clients can identify if there's any issues from a trading perspective. Is there any issues with the securities? Maybe the order timing is different. And within BTCA, you can actually look at order timing, and you can identify is actually at the time the order is placed an issue, is the time the trader is actually trading that particular security an issue, or is trading at the right time. First of all, it's quite interesting because we offer a multi-asset trading tool. So our tool called Rule Builder, RBLD, you can actually automate fixed income, you can automate foreign exchange, and you can automate listed products such as equities and futures. And there's a few developments we have done recently. So there's one development where we integrated eco data. So you're basically trying to give control to the trader at the time when there's an eco announcement. Because sometimes, or a lot of times, some of our clients, they don't want to trade during eco announcements because you see volatility in the market, and they potentially don't want to trade in these volatile markets. Additionally, we're giving traders control around when it's actually not trading. So a lot of times what's happened, specifically as well in Asia, in Asian credit, the liquidity might look good on the market or might look good on the platform, but actually once you start an RFQ, you only get 2 prices back. Your best execution policy might be 3. So we actually give the trader a last look on the trade. They can use that trade then. They don't have to go out to the market again. They can still override the decision of the machine. So we're giving more control to the actual trader. Additionally, we have recently released conditional releases. What I mean by conditional releases is time release. So the clients can actually use a timer to either track a benchmark. So for example, if they have to track a 4:15 p.m. closing order, or some of our clients are actually using it to get access to different market types, such as someone in Asia trading Latin, where in theory there might be sleep, but actually the machine can take over these trades and execute these trades. And secondly, we have a feature which we call limit price release. So the machine can actually constantly track your limit against the market value and only release a trade once the limit is actually close to market. I think it's quite nice to actually everyone coming together after COVID. I think that's number one. I think everyone loves seeing people again. And secondly, I think it's quite nice to network with people that you potentially wouldn't network naturally with. So you might network with some of your peers, you might network with clients that you might not see on a daily basis, or that you maybe not actually ever going to talk to. And it gives you the opportunity to showcase what you can offer and build good relationships.